While Congress is in the midst of debating a small business lending bill, some believe lawmakers are on the wrong track if they really want to boost lending and jumpstart hiring. Michael Iannaccone of MDI Investments and Rebel Cole of DePaul University are here to talk about solutions to fix the lending problem. Welcome back to both of you.
Thank you.
Rebel, let me start with you. Under the small business bill, there's a proposed $30 billion government fund to provide loans to small businesses. Will it work?
Well, this $30 billion is not really going to small business lending. It's going to small banks in the form of capital. It's very much a mini TARP as we had in 2008. And what we learned from the TARP in 2008 is that bank lending did not go up. In fact, it went down by 8% for small businesses and by 18% for large business C&I loans.
Okay, so Rebel, you don't think it's going to work. What about you, Michael?
I agree that it's capital, and there'll be some amount that goes to lending, but people aren't borrowing. I don't want to say that banks aren't lending. They're restricting credit, but there's probably more companies that aren't borrowing money because they're uncertain about their revenues, they're uncertain about their costs, and then therefore profits are going to be down. Okay. So you have to solve the overall economy. You have to create jobs, you have to start growing the GDP, and without that growth, then we're going to be in this stalemate with credit and borrowers.
Okay, there's three reasons why businesses are not borrowing and hiring. Healthcare, financial reform laws, those are creating uncertainty for the future of companies planning what they're going to do. Also, there's a general lack of demand for products and services. So, Rebel, what is the solution to fix this problem of borrowing and job creation?
Well, Michael's dead on. The National Federation of Independent Businesses recently had a survey, and what they did is they asked businesses, small businesses, what was the biggest problem they were facing. And over half said that the problem was they didn't have enough revenues, they didn't have enough customers. Only 8% said it was access to credit, and as Michael said, 22% it was uncertainty. So we need to deal with the problem of the economy, which is we have 27 million people who are out of work or underemployed, and deal with this uncertainty that's caused by the financial reform bill, the health care reform bill.
So give me a solution to fix that.
Well, one quick solution is to repeal the health care reform bill and the financial reform bill. We know that's not going to happen. But that's where the uncertainty is coming from. The health care reform bill is not going to be fully phased in until 2014. So small businesses don't know what the cost is going to be to hire a worker next year or the year beyond that. So they're not going to hire. The financial reform bill, I think it mandates 72 studies that are going to take 79 years to complete if they're put end to end. And the regulations won't be passed to deal with financial reform until those studies are completed.
Should we repeal those altogether?
No, I believe those are part of it, but it's revenue. It's not cost. If you gave people more revenue, you have to bring jobs back to America. We're not going to increase GDP by becoming a service industry. So, you know, the healthcare costs, yes, I'm a small business owner myself. I didn't believe that healthcare costs weren't going to go up, so they're going to go up. But the changes that they made to the bill are the things that I want, which were, you know, not to go bankrupt if there was some terminally ill person that I was covering. Taxes, yes, taxes and uncertainty in the reform bill. All the banks have gotten used to the fact that they need more equity to run their business. And there's always an uncertainty in banking. This is different than TARP. You know, if you gave, we're not going to give the small guys their money when the big guys got their money and they didn't lend? We're 2 years later now. The economy is different. Things have somewhat stabilized. You have to get the money back into the businesses. But you have to bring jobs back. You know, why can't we just tell all of the oil companies, I know this is drastic and it's not going to happen, but get them out of Saudi Arabia. Say, we don't want oil. We produce enough oil here in America and up in Alaska and over there. Put all of your efforts, go into other technologies in America, keep all of your employees, retrain them, give them tax breaks. We're producing things in America. Americans will buy those things, and that's how we're going to grow our economy.
And Rebel, I know you had an idea about replacing the payroll tax with a national sales tax.
I saw that Noah Rabini had a similar sort of plan, but he was just talking about a payroll tax holiday. You really need to change the long-term incentives faced by businesses. So what I would say is we take the combined 15% payroll tax that's paid by the employees, employers, and replace it with a 15% national sales tax. Now we know that both of those taxes are regressive, but you're going to be replacing $1 for dollar, so you're not going to be making the poor less well off, and you can also add some exemptions for that. But you're going to provide a huge incentive for hiring, more money in the paychecks of low-income workers, and you're going to provide a huge incentive for saving.
But you have to exempt food and medicine and the basics.
You may want to have a differential rate on those, like maybe 2% on that versus 15% on everything else.
Okay, real quick, yes or no, do you agree?
I agree with that, but I think something else, the burden, they just changed the 1099 rules for all the small businesses. You have to keep track of everything that you spend over $600.
Okay.
That's another massive expense for small business.
Okay, that's all the time we have for now. Thank you very much, Rebel Cole of DePaul University and Michael Iannaccone of MDI Investments.
Thank you.